The stock market is really close to a correction. Here are the stocks I'm looking to buy in March. My name is Zach. I'm a full-time day trader and exclusive analyst in the Stock Dads Discord. And in the Discord, I share everything that has to do with stocks, futures, or options. In this video, I'm going to break down the 5 stocks that I'm looking to buy in March, as I believe that we could see potential more downside or consolidation in the overall markets. As always, this is not financial advice. This is just personally what I'm looking to do in my plan. As always, regardless of what trading plan you're following, dollar cost averaging is the best way to invest long term. As you guys can see, at the time of recording this, it's March 1st, and the QQQ in just about 5 or 6 days dropped from 540 down to a low of 497. Definition of a correction in the stock market is when one of the indices drops 10% or more. As you can see, within the last 5 or 6 days, the QQQ dropped from around 540 down to 497. Again, we don't just have enough data yet to see if this candle is going to be the low or not, but as always, it's always good to start a plan. So the first stock that I'm looking to potentially get into is Tesla. Why do I like Tesla? The main reason is pretty simple. After Trump was inaugurated, Tesla went on a pretty crazy run, going from around 270 up to this near 500 marker. Now we're pulling back to the monthly EMAs for the first time. And in particular, this was just a support resistance flip that's now trying to hold. If you look at Tesla, we pretty much bounced right at that monthly 20 EMA around that 275 marker. Now what I want to see is continuation back to the upside, where we can then look for a daily buy setup to take our first long. As always, you have to have an exit plan for Tesla. And for me, I would think that there's going to be a lot more downside if and when we get a monthly close underneath the 20 EMA. So until that time, I still believe Tesla is a good long-term buy, and I think it is set up for a rebound. Just most of the stocks on this list did go on a pretty solid run at some point last year and now just needs to cool off a little bit. After such a big down move this month, what I'd be looking for is one of two things. Either an inside monthly bar where then we can start, maybe taking long-term options in April, or a sweep of last month lows with a failure to go lower and get back above that 300 marker. A few more details that go into the plan with Tesla, but I share all of those details and analysis within the Stock Dads Discord. So if you're not already in there, make sure you get in. Now, number 2 on this list is Google. This is another name that had a pretty crazy run in 2024 that now needs a little bit of a cool off. This initial cool off came on behalf of earnings, which was potentially the first red flag in the overall markets. As you guys can see right here, Google dropped from around 206 down to 191 and pretty much has been in a straight free fall ever since. Now with Google, it's kind of the same plan. I was looking to take long somewhere around this 176 for initial buys. We ended up just knifing through it, so I decided I wanted to wait for the monthly candle to close, and it probably was a good bet. Because now, unless Friday low was the climactic pivotal low, I do think there could be some more downside on Google, which would be around this 160 marker. I think it's possible to head a little bit lower, because if we just use a simple supply and demand tool here, you guys can see that the previous all-time high, which was a resistance, then acted as a support. So I would not be surprised to see potentially a retest of 150. But Google is not a name that's going anywhere. So I think if you were to dollar cost average around this 170, 175, if we dip to 160, 165 and have some more buys at 150 ready, I think this would be a good plan for the long term. Just like Tesla, you need to have an exit plan if the trade goes south. So in my opinion, I would be a little bit cautious and a little bit of a red flag if we did get a monthly close under the 20 EMA. As you can see, the last time we got a monthly close under the 20 EMA was the start of the bear market in 2022. As always, if you are willing to hold and you have a long time horizon of 5 to 10 plus years, you don't in theory need a stop loss on some of these companies that you believe in that will be here in 5 to 10 years. But as always, it's good to have upside and downside targets. Before I get into number 3, guys, I want to let you know that the last one on my list, I believe, has a chance to get to new all-time highs soon, as it has significant relative strength compared to the market. So you're not going to want to miss out. Now, number 3 on my list is actually an interesting one. This is a Chinese company that I believe could have a similar move to Alibaba. And this stock is JD. What's really interesting to me about this stock is that it had a monthly EMA flip for the first time in over 3 years. It had a monthly flip in February of this year, and the last time it was flipped to the upside was roughly March or February of 2022. So it's been about 3 years since it's been in a monthly uptrend. And as you can see, the last time it flipped to a monthly uptrend was around a similar price when it ran from 35 all the way to 100 plus. Now with JD compared to the market, It has some significant relative strength and now is setting up a monthly buy setup. So it's clear to me above these monthly highs around 43.5, we can see that continued upside to last year high around 47 plus. And then from there, my swing target is roughly $58. As always, one thing that I like to do is draw reverse fibs from the previous all-time high to the local low. And as you can see, the 0.382, which would be the first long side target in this case, is around 54, followed by 64, and then dream targets up towards that 75, 77 range. While I do think 75 to 77 is possible for this year, I'm looking more on a time horizon for options within the next 1 to 3 months, and my big dream target will be between that 55 and 58 area. In my opinion, it's very important to diversify, whether it's with stocks, options, relative strength, maybe undervalued names. It's good to spread your investments out a bit so you're not hyper focused on one sector, for example, with tech. In addition to this monthly setup, if you look at JD, it's really just been consolidating for the last 6 weeks or so here. In my opinion, I think that the earnings will send it higher and that this consolidation will break to the upside, sending it to new highs. Obviously, if I'm wrong, it's kind of the same approach where if we do get a monthly close and reverse here under these EMAs, I will close the position and then look to reevaluate. Before we get into number 4, if you guys can do me a favor, like this video, subscribe, leave me a comment, let me know what stocks you are buying. I want to be putting out more content and I want to make sure that these videos do as best as they possibly can. Without wasting any more time, guys, number 4 is Coinbase. Coinbase is another stock, in my opinion, that's set up. This name also had a pretty nutty 2024. It went from around 128 to nearly 350 and now simply pulling back to the monthly 20 EMA, which could be another higher low. In my opinion, any potential dip buys that we can get underneath 200 would be a gift. And then the same approach applies. A monthly close under the 20 EMA, we look to maybe reevaluate, resize, or cut the position in general. I do like it around this 200 to 205 mark for a bounce. And as you can see as well, Bitcoin itself has been very weak. But where did we end up on Bitcoin was the monthly 8 EMA. So in my opinion, this is kind of a must hold for Bitcoin, or else we probably have another visit with the previous all-time high around the 75K to 70K. So this is a bet on Bitcoin holding the 8 EMA on the monthly chart, and also a bet on Coinbase holding the 20 EMA on the monthly chart. If we're looking to buy into strength, we can always buy once the daily flips back into an uptrend, because most likely, unless Bitcoin goes parabolic, Coinbase will likely take a couple weeks at minimum to flip back into a daily uptrend. Dollar cost averaging goes both ways. You're never going to get the dead bottom right away, but you can also add into strength once you have more confirmation on your thesis. So again, this general area is where I'm interested in buying Coinbase. Any lower, we can also take a stab, but in the event we don't get as many ads as we want, I'd be more than happy to add into strength, again, maybe with some long-term options. Now, number 5, this is a stock you may have heard of, maybe not have heard of if you're a beginner. This one is Amgen, ticker AMGN. What's really interesting about Amgen is all the time frames are looking solid. If you look at Amgen here, the daily just pulled back to the 8 EMA with an inside bar. If you look at the weekly chart, we're getting our first weekly flip to the upside, since the November downside move due to earnings. As you can see here, it had a really ugly move post earnings, and now we're trying to crawl our way back with that weekly flip. Looking at the monthly chart, we actually did have a monthly close under the 20 EMA, but a nice failure to go lower, and now a monthly buy setup that, in my opinion, will take us back to the all-time highs above 350. You can take this in multiple different ways, looking at the daily, weekly, or monthly perspective. Overall, I really do like this stock for higher, and I personally think this will be one of the best movers in 2025 with the possibility of even getting up to $400. I would really only be concerned if we take out this previous pivot low around this 255, 260. Obviously, you're not going to be wanting to hold long-term options with a stop loss under 257 because that's a 20% drop or so on the underlying stock. But if you're just trading shares in this instance, I definitely think it's a good spot with nice upside targets up towards that 400 plus. It is possible that on this weekly chart, we do pull back to retest these EMAs around that 295 to 290 mark. So what I would do personally is look to either add into strength, or you can take some now, but just be willing and able to add if we do go lower. Regardless of what your strategy is, regardless of what your approach, does not matter if you're trading stocks or options. The best thing to do at all times is never to over leverage and allow yourself for a second or third entry. Obviously, there's so many more stocks to cover, and I cover every single one that anyone wants to ask me questions about in the Stock Dads Discord. But for the sake of this video, that's all she wrote with those 5. I appreciate you guys for tuning into another video. Hopefully, you guys learned a couple things or maybe took away a couple key pointers that you may take when you invest long term. But with that being said, let me know what you guys are looking to buy long term, and let me know if you have any sneaky under the radar stocks that you think will be high performers in 2025. Have a good rest of the day, and I'll catch you in the next video.